Very exciting to be here. So I lead the tech research at Bloomberg Intelligence, and I'm going to share a shameless plug right now that we did a $1.3 trillion forecast for generative AI by 2032, and this is a report that's available for Bloomberg subscribers. It goes into the depth of the different parts of the Gen AI stack, and I would be happy to talk to anyone about it. But regarding the panel today, I think it's exciting to talk about the role of private capital in this wave of technological innovation driven by generative AI, because at the end of the day, that's what's going to keep this going in terms of, kind of widespread adoption. So I'm going to start off with Kristin. Kristin, you lead the IPO market, the tech IPO market at Barclays. And given what we have seen from, the blow-ups in 2021 when it comes to the tech IPOs, especially on the software side, where are we now in terms of the broad IPO market when it comes to tech companies?
Well, so there are a couple of things that have happened in the last 2 years primarily. We had a major valuation reset as it relates to technology companies in the public market. And we had a major shift from a focus on growth at all costs, in some cases, to profitability. Because of that, I think the companies that were sitting in the backlog that were looking to go public have had to take a bit of a pause and figure out business model fit, make sure that they can, prove unit economics, prove a path to profitability, get profitable, and also kind of get a more sober view on what valuation looks like, especially for the venture-backed businesses that may have raised at a significant premium to where they could ultimately get public in a kind of more normal valuation environment if you look over history. So with that, I think we've seen very few technology IPOs over the last couple of years. Part of that is companies getting ready, getting to scale, getting to a financial profile that the market would accept, and also getting comfortable with the new valuation paradigm. I think we'll start to see that improve because we've now been, 2 years or so without a number of IPOs, and so a lot of these companies have gotten to significant scale and will be poised to hit the public market. Today is, we're in a pocket of uncertainty right now. We're leading up to the election. We have, some time to see kind of when rates will start to come back down, how many cuts we have this year, if any, and then what that looks like next year as well. So I think that most companies that are in the backlog have opted to wait for a little bit more certainty in the macro before they tap the market, given that they've waited a couple of years. That being said, there have been a few IPOs that have gotten out, and they have strong conviction from the shareholders that are coming into those IPOs because they're not buying it for a quick pop. They're buying it for, to own the company long term, because the performance of IPOs this year, if you average all the IPOs that have come public this year across all sectors, up 6%. That's not exactly like running away. There's no FOMO chasing IPOs. And so it's really fundamental buyers investing. But I think that we'll start to see a little bit more momentum next year.
Yeah, and we've seen a couple of good ones, ARM, Rubrik. I'm sure there are others that are there. Farhan, you have an investment background, and you've also done M&A deals. From your lens, given we are talking about AI and tech being synonymous right now, what is it that makes for a good business model when it comes to these new crop of AI companies?
Well, so I view this as being split into different dimensions. One is infrastructure level investments. You'll see LLM companies which are actually building the models, garnering a lot of investments. And then there's the other part, which is actually building applications for business use cases. That part is still not as robust. Right? So most of the money that has been going into the sector has been going into the infrastructure level investment part. As the market evolves, as the technology evolves, we'll see that shift happening where businesses which are actually using AI tech to further their business use cases will start getting investments, valuations that they deserve.
And so what valuations do these companies deserve, Kristin, given, there isn't a clear business model, given, every day you talk about models getting bigger and, there's a lot of investment a company has to make to train these models. I mean, are they at a point where you feel, okay, when they go to the public market, investors would be like, there is a path to profitability, which wasn't the case back in 2021. So you think what would help these companies get there? And what's your perspective in terms of the evolution?
Yeah, well, there's a reason why this room is so full. And Umayma said something in her opening remarks. She said, we're trying to get our hands around it, right? And I think we're all trying to get our hands around which companies are investable, how to think about, who's going to win. And so most of the investment is happening at the venture level, where you can take a portfolio approach. You can buy 8, 9 different companies, and then you're not necessarily picking a winner, but you're hoping that one of them is the winner. And the other investment that's happening in a more meaningful way, because it's kind of like winner agnostic, is on the chips side, right? So we've seen a number of these chips companies really take off with the explosion of AI and these technologies. And so I think to get to the point where you're not just taking a portfolio approach and it's the early stage investments happening, we need to see those exits start happening, and we haven't seen that yet. So we haven't seen really a strong strategic bid for these venture-backed AI software businesses because I think it's too early to tell who the winners are going to be. And so we need to see that play out a little longer. And once we start seeing a strategic bid for some of these businesses, it'll give, I think, investors a little bit more confidence in terms of what areas and who the winners are.
And just to hone in on that, so is there a difference in positioning for venture-backed versus the private equity guys here?
Well, yeah, so the venture-backed businesses are very early, right? And so it's concepts, and then it's proving out market fit. It's proving out, customer adoption. I think in your case, right, a big part of the business is showing when the technology, when you can't totally get your arms around the technology differentiation, it's who are your customers, what's the net retention look like, and proving out the kind of end market more than it is what are the specifics of the technology. And so that's the part that's a lot of the venture investments that are happening are kind of proof points like that. Private equity typically are looking for businesses that have a proven path, proven profitability. It's something that they're just investing to scale or to improve the the profitability of the business. And so that will happen at a much later stage. Or they're buying some of these technologies to put into their existing portfolio companies, but that's more of a strategic buy, and we haven't seen that yet.
Right. And to dovetail to that, Farhan, I mean, the market has been very good at sniffing out, where the next wave of AI is going, from chips to power shortages to data center demand and upgrades. From your lens, do you care about these on a day-to-day basis at your company or when you are talking to investors?
Well, so don't take this as a humble brag, but we are one of the few companies which have been able to actually build out business use cases. So moving away from the infrastructure part to actually building use cases which clients of ours can deploy. So to take a step back, we are an enterprise AI platform for learning automation and workflow automation. We enable our clients to build and deploy AI apps at scale. So our clients in oil and gas, manufacturing, they're using our platform to build and deploy AI apps for their own use. Right? They're driving efficiencies right now, and they're moving to the phase where they'll start generating revenue pools or products which can contribute to their revenue top lines, moving away from just efficiency focus that is being used by AI apps right now.
Yeah. I mean, I guess when it comes to how companies are shifting, it's not going to happen all of a sudden that, you upgrade everything or you pivot to this new way of doing things. From a market timing perspective, how do you think, Kristin, companies are going to say, okay, this is the right time for us to go public because there is this nice tailwind when it comes to enterprise spending, or just, how the investors are thinking about these companies? Is there a sentiment that you track or anything that helps you determine from a market timing perspective?
Well, I mean, the one thing we've learned from 2020, 2021 IPO classes is how important scale is, because the companies that were smaller scale, less liquidity in the public market, were impacted much more meaningfully than those that had liquidity. And that's just because it was kind of like the top 10 investors, 1 or 2 start to sell, and you see the stock, impacted meaningfully, and then everyone runs for the hills, and then you have a number of orphan stocks. Even if the companies are performing, it's hard to have the confidence as an investor to get back in. So scale matters a lot, and I think it's gonna be some time before we see really scaled assets in AI. A lot of these companies are growing very quickly, so maybe it's not as long as we've seen historically in other trends, but I think it will take some time for these businesses to get to scale and have the proof points around unit economics. I mean, you've got scale, growth, profitability, all the things that really do matter, but that's what the market needs to see. And scale, we're talking a revenue scale of $250 to $300 million, at least in the year that you're selling off of, which is the forward year, is really, I think, the benchmark right now for investors to participate, at least on the software side. Would you agree?
Absolutely. Couldn't agree more with that. So it took us about $400 million to be able to start thinking about putting the IPO process in motion.
Yeah.
Anything you can share around the state of tech unicorns?
Well, the interesting thing is a lot of the companies that are private in our backlog, kind of street-wide to go public, a lot of them are software companies. And we've seen in the public market a number of companies have challenges with elongated sales cycles. We've seen vendor consolidation. And so I think that if you look at the companies in the backlog that are unicorns, a lot of the software companies are going to wait a little bit to have investors have more confidence in the enterprise spending towards software in general, or be able to show metrics that they've been able to withstand either price increases. They have net retention numbers that are significantly better than some of the companies that have been challenged in the public market. As it relates to unicorn valuations, I think that that was something that was such a focus because there was a competition for engineering and sales talent, especially in the Valley. I think there's a lot more sophistication around what unicorn status really means from a lot of the employees. And that is, because some of these companies would have unicorn status, but really have ratchets or some sort of synthetic instruments that got them to the unicorn status, but didn't necessarily persist if they were to go public, once they were to kind of get valued for an IPO. So that's the hype around unicorn status, I think, has come down pretty significantly in the last couple of years.
And Farhan, for a company with $400 million in revenue, how do you think about tech spending? I mean, in general, you're the CFO, so when you talk to your tech lead or your CIO, how is it that you're thinking about investing in your business to upgrade and just overall the tech stack that you currently have?
So one thing that we have realized very pertinently over time is data is the lifeblood of any AI. Data is what breaks or makes models. And one thing that I think we did well was identify this early on, and we put in motion a process where we are actually procuring data. So a lot of our spend is focused on data purchases to make sure that the models that we build ourselves are actually good to be deployed at our client's end. Right? Other than that, your spend on infrastructure, on compute power, that follows the trends that you'll see across the market. there are not going to be a lot of variations between players on how much are they able to squeeze or increase their spend on that.
So your infrastructure guys ain't coming into you and saying, oh there's
they
supply shortages that we got to pay up for the GPUs.
They always are. I don't get surprised by that anymore.
Okay.
But so that's a constant. And that is something that we always have to factor in when we think about where do we actually make the investments. But what I'm saying is that is consistent across any AI company.
Yeah. Is there a feeling right now that you are going to be left behind in AI if you don't allocate more capital, or no? I mean,
I really hope my clients have that feeling if they don't have it yet. But so there's definitely excitement. People want to try out the technology. They want to understand what this has to offer. And they're taking baby steps in terms of adoption. So they'll make few investments, try it out, and if that works for their business, they'll expand the use case.
Yeah.
That's how we've seen this panning out.
Yeah. And Kristin, when you're looking to do TAM analysis for the companies you're looking to take public, how are you even thinking about a TAM for something like GenAI? Are you throwing trillion-dollar numbers, or you're more realistic here?
Yeah, over time, I mean, this is a massive, decades-long shift in innovation and huge tailwinds. I think it's hard to put a number on it. I would say, just anecdotally, kind of adding to what Farhan just said, anecdotally, in talking to some of the large cap clients that we cover, there are two ways they're approaching the efficiency piece of AI. One is top down. What are the point solutions that we can plug into our existing processes to improve efficiency? That's an easy sell, right? Because call centers, whatever it might be, anywhere you can add automation and improve margins very quickly, that's an easy sale. I think what you said at the beginning, Farhan, when you mentioned it's more than just the efficiency, it is actually the innovation piece of it and accelerating innovation. That's the piece that I think investors and companies are trying to figure out, because they don't want to be left behind, because they're worried now. Even these large incumbents are worried about new entrants scaling so rapidly because of the technology advancements. And so that, to me, is where the board meetings are. What do we need to be worried about? Because the easy sale is on efficiencies.
Yeah. And are you seeing efficiency, Farhan, in the OPEX savings that folks are able to?
In our organization, yes, but no, she's absolutely right. The focus right now is on capturing efficiencies across the cost buckets. But once a client has done that for a bit, they very quickly realize that they can actually use and leverage the same tech for enhancing their product portfolio. They can build newer products, which adds directly to their top line. So the coverage area where they can deploy this technology expands from just being focused on capturing efficiencies to enhancing revenue, enhancing top lines.
Yeah, I mean, right now we are at a stage where we have generalized large language models that can, do everything. Mm-hmm. But everyone is expecting there will be more specialization when it comes to LLMs. So how do you think it will be disruptive to your area of operations and some learning? I mean, I think education is where it all started,
Yes.
And so maybe, spend a couple of minutes on that. Uh-huh.
So we as a company, we do not use LLMs. We have built SLMs, or small language models, which are specific to certain sectors. And that is what we deploy for our clients. So LLMs, and that is what drives the actual usage for those clients. If you start with an LLM, a generic LLM, and try to deploy that for a client in the oil and gas space, and then also the same LLM for a client in the medical or insurance space, it's a lot of work, and the results are not as effective. Right? So the approach, which we've realized over time works, is you create smaller language models, which are vertical specific, and in some cases client specific, and deploy them. That's what drives the usage. That's what drives the ROI for the clients in the end.
Yeah. Would you agree with that?
Yeah, I would say in the quality of the data that they have is and back to your point on data matters, and the quality of the data that they're putting into these models is really what is going to drive the best results.
Yeah, and so we do a CIO survey every 6 months at Bloomberg Intelligence, and one of the things that has come out for the last 2 times we've done this survey is the dependency on hyperscalers, the cloud service providers, how much sway they have when it comes to the compute, the development of large language models. How are you advising, young companies that you're working with to take public in terms of, their positioning in these markets where the hyperscalers have so much dominance?
Well, the reliance on hyperscalers is massive, and that's no question. I think the best advice for young companies is to have diversification of partners, and I'm sure you guys are seeing that too. Like it's like any, it's like any boom in technology. We saw this with chips back in the day when phones were first coming out. Like any reliance on one particular vendor is going to put you at a disadvantage, and over time, especially from an investment standpoint. So having a diversification of vendors is the safest way to kind of scale.
Yeah. A lot of the value in this whole chain has been going to the hyperscalers so far.
Yeah, and do you think from your perspective, the reliance is not going to go away when it comes to the IP that you want to maintain versus what you do on cloud?
It will take time. So we are totally dependent on our clients' choices as to which cloud environment do they want to deploy on. Right? And that dynamic, if it shifts, it will take a long time.
Right. And so, Kristin, we have 3 minutes left. Perhaps, you can sum it all up in terms of your expectations, given you mentioned this is an election year, so, things may take a while to play out. Maybe have a 12-month outlook or something along those lines?
Look, I think I'm bullish. I'm optimistic probably by nature, but I'm bullish on kind of a post-election. It's hard because we have a smaller window, but if we start to see some rate cuts and investors continue to get more confidence that we're moving in that direction, it makes the funding environment easier for all of our clients. We're seeing a shift in the way that public companies are financing themselves. One interesting shift recently is refinancing straight debt with convertible paper because they're able to have pretty significant interest expense savings. And so there are different financial markets that public companies are using, or financial instruments that public companies are using right now that are working, but will continue to get more more attractive as rates start to come down and we have certainty around the political environment. And then we start to see, the IPOs start, come out. Once we have confidence in the secondary market, obviously it makes new issues easier. And then you have more confidence in the private market, right? So it's easier to put money to work in the private market when you see exits in the public market or strategic activity. And that is in AI, in software, in chips, and kind of every single subsector within technology.
Farhan?
So we are not going back to the zero interest rate era, I think. But yeah, it'll take time for these things to stabilize. As Kristin mentioned, election year plays a huge role into how these things pan out, how investors look at it. So from my perspective, it's just wait and watch for now.
And from the enterprise side of the equation, given you're running a company? Enterprise
side is not as dependent on this, especially when it comes to technology spending. And for products like this, or for technologies like these, the sales cycle and the spend cycle is fairly well set. So it doesn't change dramatically in the election year. You would see some tailwinds, but not a lot.
So it won't have any impact on your net retention?
I wouldn't say, I hope not. I wouldn't say any impact, but not a significant impact.
Got it. Thank you. Well, this is all the time we have. I want to thank my panelists and to you guys for being a great audience. And a special thanks to Mubadala, our presenting sponsor of Bloomberg Invest, for making this session possible. And now if you can please make your way to Hall 2 at the far end of the hall for start of the main stage program. So thank you all.